In this video, I'm going to go through the different options you may be considering when you're wanting to sell to customers in the UK or the EU. And what I'm specifically talking about here is the different types of company setup and the VAT registration options that you have. And I'll say straight away, do not take what I say as gospel. I'm not a financial advisor. You've got to get your own personal advice from your accountant, your own financial advisor. Okay, so this is just stuff I've learned over the years of running a UK company and selling on Amazon. So take it as you will. So let's start off by looking at, okay, if you want to trade in the UK, you've got two options: using your own existing company, your own foreign company, whether that's based in the US, Australia, Canada, India, China, wherever that might be, or you can set up a UK company and trade that way. And each has their own sort of pluses and minuses. Now, you can trade with your own company, own foreign company into the UK, selling to UK customers, but there are two things to consider, and that's the location of your stock. Well, one thing really is location of stock. But the other one is whether or not you should register for VAT. Now, if your stock is located in your own country outside the UK, then you don't need to register for UK VAT. You can sell to UK customers and send each customer the item that they've bought yourself. So you can do merchant fulfilled. But if you do want to store your goods in the UK in a fulfillment centre such as Amazon or a warehouse, just like my warehouse, then you will need to register for the UK, for VAT in the UK. There's a rule that if you locate your stock in the UK, you have to register and charge your customers VAT. So a couple of points I've got here. There's no restriction to your selling. If you're selling from outside the UK, keeping and sending your own stock to the customers. But one thing to remember is that if you sell an item to a UK customer, you post it to them. When they get it, they may end up paying VAT and import duty. All depends on the value of those goods. And I've got a little snippet here that I took from the HMRC website. Let me see if I can zoom in a bit and we can focus in on it. And this says really, this is for any customer. You'll pay VAT on goods sent from non-European Union countries. So in our case, outside the UK and the rest of Europe. And the customer will end up paying VAT if it's a gift that they're receiving that's valued above £34, or they've made a purchase valued above £15. Then there are other things as well, such as alcohol, tobacco, fragrances. You can see that stuff there. So what I'm saying here is just remember that your customers may end up paying VAT and import duties, even though you're not responsible for it, which isn't a great customer experience, is it? So what you may well be considering is, should I store my stock in the UK? If you do that, you have to register for VAT. So let's come down here. So I've said, yep, you've got to register. Now, when you register for VAT and you want to transfer your goods into a UK fulfillment centre somewhere, you're going to pay import duty on the value of the goods plus VAT plus shipping. So it can add up to quite an amount with import duty. But VAT, you'll definitely pay VAT on the goods at the rate associated with those goods. So if it's a normal item, you'll end up paying 20% on anything you bring in. So if you bring in goods valued at £10,000, you can see here I've got an example, you'll end up paying £2,000 in VAT as soon as they enter the country. So I've got here, when you bring in goods into the UK, you pay VAT to the HMRC. Next, when you sell goods to your customers, you make some sales, you have to charge VAT to your customers and you have to collect it. Then you actually hand over that VAT that you've collected from your customers to the HMRC. So you end up making two payments really. One when you import the goods of £2,000, and then once you've sold your goods, you give HMRC some more money, some more VAT that you've collected. But it's not just 20% of the sale price. What it is, it's the difference between the sales VAT amount and the import VAT amount. So I've got this little example to try and explain it. If we import some goods valued at £10,000, you'll end up paying £2,000 VAT when they enter the country. Then you sell all your goods and the total sales comes to £83,000. And I'll explain why I'm using that in the example a little later on. And down here, I've got a little breakdown for you. So the sales value is 83 and the VAT that you've charged to the customer would equal £13,833. Now, how's that worked out? Well, what it is your 83,000 is made up of, this is 69,167 is the value of the goods that you're selling. Well, not the value, it's the sale price of the items that you're selling. So that counts as 100%. That's your sale price. We then add on 20% VAT, and 20% of 69,000 and a little bit comes to 13,833. Add those two together, that gives your sale price of 83,000. And it would be this amount here, 13,833, that you would hand over to HMRC. But remember, you've already given them £2,000 when you imported the goods. So you can deduct that from the amount that you have to pay them. So you can say, yeah, I've sold the goods, 13,833, but I've already given you £2,000. So at the end of the quarter, you're going to pay the HMRC the balance, the £11,833. So that's the options really available to you if you want to keep your own foreign company and sell into the UK. You can either not register for VAT, but you have to send all the goods to the customers yourself, or you have to register for VAT and you have to go through the collection of VAT from your customers and do your VAT returns. Now, let's have a look at if you're trading with a UK company. So you decide, well, okay, what are my options if I register a brand new company in the UK and trade using that UK company? Well, it does change a little bit. So let me scroll down so we can focus in on that. So with the UK company, you can store your stock inside or outside the UK. Pretty obvious. But the main sort of thing with getting a UK company that you might be considering is taking advantage of not having to register for VAT straight away. And what I mean is that a UK company has an advantage over any outside non-UK entity. We have this option of being able to trade in the UK and make sales up to a value called the VAT threshold, which currently stands at £83,000. So what does that mean? Well, when we come down to it, we still have to pay VAT on things that we buy for our company and things that we import, but we don't have to charge our customer VAT. So what this means is basically you can save up to £13,833 and a few pence by not registering for VAT. You can make sales up to £83,000 in a tax year, and this will convert to saving up to that £13,800. So there's a real big benefit in setting up a UK company. When companies are small and starting out, 13 grand is a nice big chunk of profits that can go back into your business. That's a big benefit. Now, when you trade above the 83 grand, then unfortunately, and many of us are in this boat, we have to register for VAT at that point. I think that some of the terminology HMRC put on their website is if you think you're going to trade more than that, then you are, in the tax year, you are supposed to register beforehand. But I think the normal sort of rule of thumb is wait until you get to that limit. Once you cross the 83 grand threshold, you've got to register for VAT, and then you'll have to start charging your customers for VAT. Now let's come down to some of these points we've got here. So I've made a point here saying when you register for VAT, you can claim back all the VAT you pay on imports and company expenses. So what that means is once you're above this £83,000 threshold and you've got to register for VAT and start paying charges. Well, because you pay VAT on your imports and expenses within your company, if you're buying stationery, if you're renting a warehouse, renting an office, something like that, you're going to pay VAT on all that stuff. Well, when you register for VAT, you can claim that back against your sales. And not just that, when a company is just starting out, maybe the first month or two, you're going to have very, very few sales at all. Maybe it takes a month for you to set the company up. Well, if you're VAT registered from the start, what it means is if you spend, say, £1,000 on your company setup with your accountant, you're buying office furniture, you buy warehouse space, whatever you're paying VAT on, when you fill your VAT return out every quarter, you can say, I've already paid this amount of VAT. And if you've not got the sales to cover that, and what I mean is, let's say you spend a load of money and you've ended up paying £2,000 just in VAT for all your purchases. Well, if all the VAT on your sales are not greater than £2,000, the HMRC will actually give you back the VAT you've paid. So there is a slight benefit there that you can register and start getting this VAT money back that you've already started paying, maybe on your imports and purchases. Now down here, these are just examples of some of the fees. So we've got Amazon are going to charge you VAT on fulfillment costs. You've got your accountant fees, rent, stock purchases, and imports, and so on. And then this final note. Well, this is for you to think about if you're going to be doing a fair bit of business straight away. I'll put a note here, but I've sort of worked it out that if you import goods greater than £69,165, you would actually be better off registering for VAT straight away. I could be wrong with my calculations, but I think that's how it works out, and I'll show you in the examples when we get on to that. But that's one thing to consider if you're looking to jump into the European market quite large. Maybe you're selling in the US and you're already selling hundreds of thousands of dollars a month, maybe $2, $3, even $500,000 a month. Well, you've probably got a whole catalogue of products you can bring over to Europe. So if you think you're going to be importing more than the 69k in imports into the UK, I would strongly advise you look at registering for VAT straight away, because the import VAT you're going to be paying is going to be more than this £13,833. So you'll be able to claim back this £13,833 straight away as you're starting to trade. We'll have a look at it in a minute. So let's move a little bit further down, and I'll zoom out in a second. Now, when we're looking at registering for VAT and you think, yep, it's at that time I've got to register, you probably won't find much out there talking about a flat rate scheme. In the UK, it's pretty common that small companies will start their VAT registration on a flat rate scheme. Now, this differs from a standard. With a standard scheme, standard VAT, normal products are charged at 20%, and you just charge that on top of your product, and then the customer will end up paying that amount. So when you're registered for VAT, you can claim all the VAT you pay on your imports and company expenses, and you have to hand over the VAT you collect on your sales. With a flat rate scheme, it's a little bit different. What this means is you charge VAT to your customers at the standard rate, but you don't hand it all over. Instead of you claiming back VAT on your imports and expenses, what you actually do is you pay those as normal, but when you make sales and a customer pays the 20%, you can use your flat rate scheme to only then pay a smaller percentage to HMRC. And with most online retailers, I think I could be wrong on this, but the flat rate percentage is actually about 7.5%. You can go to the HMRC website and have a look at all the different flat rate schemes. There's absolutely loads of them. But for a normal internet retailer, I think we come under other retail, something like that. It's about 7.5%. So what does this mean? Well, if you sell an item for £120, normally you would pay £20 to HMRC. That's the VAT amount. So if your item is £100, you add £20 VAT, the customer ends up paying £120 to you, and you hand that £20 over to HMRC every quarter. Well, with the flat rate scheme is you collect that £120, but you'll end up only handing over 7.5% on this specific scheme, which equals £8.40. So there's quite a saving there. Yep, you do have to pay the VAT on your imports and company expenses, and you can't claim them back against your sales, but it is beneficial because you do end up sending over a lot less money to HMRC when you're on this flat rate scheme. Now, it doesn't mean that, oh, fantastic, we can use this flat rate scheme and actually save a bit of money once we're above this £83,000. It does mean you can do that, but only for a certain amount of time. And it all depends on how much volume you're putting through your business, how many sales. So we'll have a look at the, let's have a look. I've got some little snippets from HMRC website here, and I'll try and zoom in so we can see them a bit bigger. Here we go. So this is all about the flat rate scheme, and it says who can join. The flat rate scheme is for small businesses. You can apply to use a scheme if you are eligible to be registered for VAT. Well, pretty obvious. Your taxable turnover excluding VAT in the next year will be 150k. So this is one of those things. So once you're above 83k, you need to register for VAT, but you can go onto this flat rate scheme as long as you won't be more than 150k in the next tax year. And this amount, 150k right now, is specific for registering for VAT. 150k isn't still the number that you have to consider once you're already registered for VAT. It's the figure that you've got to bear in mind when you're first registering. And what I mean is, as we scroll down, you'll see this. So it says, what if my future turnover rises above my forecast? So if you think you're going to do more than 150k, it says, if your forecast turns out to be too low, we will not penalise you, provided there were reasonable grounds for what you forecast. So it's sensible to keep a record of these figures, and they can use to be calculate your turnover in the future. If your forecast had no reasonable basis, HMRC may exclude you from the scheme immediately, or from the date your ineligible use begins. So that just means do some good forecasting. Now it says, what if my turnover rises once I've joined the scheme? So this is where this 150k sort of goes out the window. Once you're in the scheme, it says you will cease to be eligible to use the scheme if the total value of your income for the year is more than 230,000. Okay, so you have a bit of leeway there. There's another 80,000 on top. It says, however, if HMRC are satisfied that the total value of your income in the next 12 months will not exceed 191,500, you may be eligible to remain in the scheme. So there's always sort of rules, and then they come back with, but then think about it, we may decide to change our mind. So this is where your accountant can help out. But what I want to highlight here is you can move on to a flat rate scheme and save quite a decent amount of VAT that you pay over to HMRC, even when you're trading up to this £230,000 mark. I guess last thing, these figures above include VAT inclusive income of all tax and exempt suppliers. So a bit of nonsense. So let's go back and we'll zoom back out. So what does that mean? Well, it means we can save a bit more money. what we'll do now is flip over and actually have a look at some examples that I've worked out. So you can do some sort of comparison of, which is right for you. Should I register a UK company? Should I register for VAT straight away? Or should I make use of the £83,000 limit and so on? Alright, so I flipped over to the example sheet and let's go through some of this. It looks as though there's loads of figures here, but I'll walk you through it, and it is pretty easy. So I've got 3 different types of scenarios. I've got, what if we're trading? Tell you what, let's make this a little bit bit bigger. What if we're trading with a UK company that is not VAT registered? Okay, let me zoom back out. Well, what I've got here is some examples of if we're importing products into the UK. We've got here a value of 15k, 25, 35, 45 and so on. It just keeps going up. This is the VAT we would pay normally on our standard rate VAT products. So on a 15k value import, you pay £3,000 in VAT straight up. And if you're not VAT registered, you can't claim this back. But that has advantages, right? Because you paid £3,000 in import VAT, but when you're making sales, you don't hand over any of the VAT on your sales. So here we've got, this is the VAT, it says VAT paid on the sales value. Well, actually it's not. You're going to save money because you're not registered for VAT. Excuse me. So what this means is on 50k of sales, whatever time period in your year it takes to make that, you're not handing over £8,333 to HMRC. You get to keep it. And on the right hand side, it means, all right, in total for the year then, we pay £3,000 VAT. And instead of then paying some additional VAT based on your sales, you actually start to make a saving. You save, £5,333 just by not having to pay the sales VAT. So that's your 8,333 minus your 3,000, leaving you 5,000 in your back pocket. If you make 60k in sales, then just take your 3k off that, leaving you 7, and so on, all the way up to 83,000. So on £83,000 in sales, if you've paid £3,000 on imports and maybe other additional company costs, if you were VAT registered, you would pay sort of this amount, but you can take the 3k off that, so you actually end up saving £10,833 by not being VAT registered when you start out. So these figures are all the same going down there. It just shows you the VAT that you're paying. So total VAT you pay throughout the year on £3,000 of imports. Doesn't matter your sales value up to 83k. This is how much you end up paying for the year. Okay. Now, what we have here, this box next to it, is this savings. So what I'm saying here is on £83,000 of sales per year, with not being VAT registered, you pay £3,000 in VAT and you make a saving of £10,833, because on 83k in sales, you would pay £13,833, but you're not. You're just paying £3,000. So you save £10,833. The higher your imports go, or the higher your company expenses are for the year, then your savings starts to reduce. All the way down to if your company costs, the VAT you're paying, go above 13,833, and in this case we're saying we're paying 15,000, well, you would actually be better off registering for VAT straight away. Okay, so compared to this one, any company VAT registered, we can see if our company costs us 75k for the year, we would have been better off registering for VAT. So you've got to consider that. Are you going to be, selling a lot in the first year? And if you are, if you're going to be importing a lot and selling a lot, you might want to register for VAT. Now, it's probably unlikely you're going to have 75k of costs and only £83,000 in sales. If that is the case, then look at your business model. But what I've done with these figures is just to illustrate that you could be better off, in some circumstances, registering for VAT straight away. Now let's come down to this one. Any company VAT registered. So, all right, we have registered. So on your £15,000 of imports, you pay £3,000 importing straight away. And then on the value of your sales, we got our 83, we got our normal VAT amounts there, but we can go up to 150. And if you remember, these are those flat rate thresholds, 150, 230, and then I just stuck a 300,000 here, showing you how much VAT you would pay. Well, with being VAT registered on £83,000 in sales, that's this example here, you would end up paying £13,833 in VAT. Everything, all the VAT on your sales, which amounts to that number, 13.8 thousand, has to be handed over to HMRC. When you pay it, you actually pay it in two lump sums when you import your goods, and then the remaining 10,833 once you make your sales. So we can see here, okay, based on 83k, doesn't matter what your import value is, you will always end up paying this amount of VAT. And you can see then how this sort of compares with not registering for VAT straight away. It's only when you've done this 75k or above that you're actually better off registering straight away. Now this third example is, all right, we register for VAT, but let's use this flat rate scheme of 7.5%. So what we have here is 15k in import value, £3,000 we have to pay in VAT. Now up to this £83,000 threshold, the VAT that you would actually pay to HMRC only equates to 6,225 versus the 13,833. So if we go over here, we actually make a saving of £9,225. Sorry, I'll say that again. We pay £9,225 in VAT, giving us a saving of 6,225 compared to not registering. Hope that's sort of making sense. Have another look at the figures. As the import value increases, then we pay a bit more VAT, but the same thing, our saving is consistent all the way down. So it is better for you up to this, say 150, then 230 limit to actually register for the flat rate scheme when you start out. Now this column here, or this box, is based on an example of making 150k in sales. So if we make 150k in sales, then if we're not registered for VAT, it doesn't really count. We can't really work the figures out because you have to register for VAT. Okay, so once you're in this 150k or anything above 83, you've got to register, and the decision is, do I register at the normal standard 20% rate or use one of these flat rate schemes? So here we can see if we registered under the normal scheme, compares here, we're paying £25,000 in VAT compared to the flat rate scheme. We'll look at the 150. We actually would be saving, registering flat rate, £10,750 because you would only pay £14,250 in VAT to the HMRC on the flat rate scheme. So here you can see the savings, and again the savings start to diminish the more costs appear in your business, whether it's importing goods or whether it's buying stuff in your company. So back over here we can see the savings we can make on the flat rate scheme compared to the normal scheme, and it diminishes when we get above that £75,000 in cost. Now I'll zoom out a little bit so we can see this 230k example. Now on here, 230k, it's not applicable because we're above the limit, so nothing there. On 230k in sales, you would end up paying £38,333 in VAT. Now if we compare that against a flat rate scheme down here, flat rate scheme, you will pay £20,250. And remember, I said a little time ago that you have to register if you're, well, you can register on the flat rate if you're going to do within 150k in that first year you're registering. But then once you're registered, you have this leeway where you could do up to 230. You need to speak to your accountant whether you can actually stay in that. But on this example, 230k, you can see even bigger savings here. So 230k in sales would mean on the flat rate scheme you pay £20,250 VAT, whereas on the full rate scheme it's £38,333, so you're saving about £18,000. And again, the savings diminish the more the costs go up, and probably if we get, I don't know, if we get between 100 and 150k in costs, maybe we go into negative territory again with the savings. You can sort of see that trend though. So definite benefits on being on this flat rate scheme. And then as we go along, if we make sales above 230k, well, we have to come out the flat rate scheme. We're above that 230k limit, so we've got to go on to the normal 20%, and we're just paying top whack. £50,000 on £300,000 in sales. Now, I hope that's been of some use. I've got a few additional bits and pieces to come on to here, and that's really, we've been looking at this on saying, yeah, the cost to your business is what you'll pay VAT on, and that for the majority of people is going to be the import value of the goods. But you've got to keep in mind, if you're not registered for VAT, you're going to pay VAT as company costs in different areas. So what I've done here is another little example. I'll zoom in a little bit. Here we go. So I've entitled it Additional VAT You Pay If Not VAT Registered. So let's say you sell 1,000 units of goods on Amazon. Amazon are going to charge you a fulfillment fee. Now, what you normally don't find, or you can't find very easily on the Amazon website, is they're going to charge you VAT on the fulfillment fees. So on this example, if your fulfillment fee for a product is £1.77, I just picked that out of thin air, right? You're going to, it is a pretty common fulfillment charge, by the way, but you know, £1.77, it could be £2.30, it could be £4, it could be less. The fulfillment fee in this example would mean you're going to pay an additional £354 VAT. So you've got to bake that into the cost of doing business. And you've got to keep it in mind that, well, yeah, you're actually going to be paying this VAT when you are not VAT registered. Also, if you use another prep company, so if you ship your goods into the UK, say to our fulfillment centre, our prep warehouse, and ask us to send it on to Amazon, we're going to charge you additional costs as well. And it's the same as your accountant. If you've got an accountant in the UK, they're going to charge you VAT. Really, any business in the UK is going to be charging you VAT, and you've just got to work it into your costs. So here in this example, all I'm saying is you've got an additional £354 VAT if you sell 1,000 units. If we prep the items for you, maybe it'll cost about, I've just chosen an average of 30 pence a unit. So it'll cost you £300, and then we'll add on £60 VAT because we have to charge that and give it to HMRC. So the total you're going to be paying just on selling 1,000 units is £414. And you can see here, the more units you sell, obviously, the more VAT you're going to pay. The more services you buy in the UK, the more products or investment you do in your company, you're going to be charged VAT. So you've got to take it into account. So the more you sell, the more VAT Amazon's going to charge you. Other service companies are going to charge you as well, so you will be paying more VAT. So just bear that in mind when you're taking into account all these examples here. And I've highlighted this 6,000 here, just as an example. So if the threshold is £83,000 in the UK for the sort of sales threshold before you have to register for VAT, I've done an example saying if the unit price is £13.83, then you're able to sell 6,000 units before you'd have to register for VAT. So this would mean you would end up with an additional £2,484 in VAT you have to pay on selling those 6,000 units. So let me zoom out, and then I've just got a little bit of text here. It more or less covers what I've just said, but just to highlight it all, it says if you register for the standard VAT scheme, you can reclaim any VAT you pay as a company. This is especially useful when you are starting up the company. All expenses that include VAT can be offset against VAT you pay on the sale of items. If you pay 6k import VAT and make no sales in your first quarter, you can claim all of this back from the HMRC. You will of course end up paying the £6,000 back to HMRC when you do start selling your goods. So maybe it's 2 or 3, 5 months later you do make your sales, then you are going to have to hand it over again. But it's nice to actually be able to claim that back when you're just starting up. Don't forget the additional VAT from Amazon, prep companies, etc. And in fact, nearly all European companies will charge you VAT for anything you purchase. If you are VAT registered though, you can claim it back. Now, specific for non-VAT registered companies, Amazon will charge you VAT on top of all their fulfillment fees. And you actually never see this until your settlement reports are generated. And if you are VAT registered, well, once you tell Amazon you are VAT registered, they actually won't start charging you VAT, so you don't even have to claim it back. They'll just take it off their end and not charge you. Now, VAT is not a tiered system. And what I mean by this is once you estimate you will trade above 83k, you will be paying VAT at the rate you choose, flat rate or full, on all sales. It's not like, okay, I'm VAT registered, I don't have to charge VAT on the first 83, but I do anything above it. No, that doesn't work. It's not a tiered system. You pay VAT on everything as soon as you register. Now, once you estimate you will trade above that 230k mark per year, you have to charge the full VAT rate. So you have to go onto this scheme. Okay. And then last thing I've just got saying, take a look at the blue section to estimate the additional VAT you would pay if not VAT registered. And the example is, if you sold 6,000 units before reaching the 83k limit, you would pay an additional £2,124 Amazon fulfillment VAT and £360 prep service VAT if you use that. And that's just going back to what I showed you over here. Now, we've covered quite a lot in this video. Hopefully this has given you an example or given you some food for thought to determine whether you want to set up a UK company or not, and the benefits with the VAT saving. And also whether you want to instruct your accountant, whoever you use to register your company and register for VAT, whether you want to tell them about the flat rate scheme, because quite a lot of companies will probably just put you straight on this full rate scheme. Well, make sure you tell them, let's consider the flat rate scheme, because you can make a saving there once you're selling above that £83,000 mark.